Hey guys, welcome to the Blockchain Bandits podcast episode 3. You're joined here by me, Jeff.
And myself, Courtney.
And me, Andy.
And last week we spoke about SegWit2x, Electroneum, and what else did we speak about, actually, apart from that?
SegWit2x, Electroneum, and oh dear.
We speak a lot.
Yeah, we spoke
about a lot of stuff, innit? But the main things we wanted to focus on was SegWit2x and Electroneum, because they had a big week this past week. They were big in the news. So first off, SegWit2x, the Bitcoin hard fork, was cancelled out of nowhere. A document came out. One of the developers, in his statement, said that the reason for the cancellation was because there wasn't a consensus on the fork, and they didn't want to split the community. That's the reason that they pushed forward to people initially. There's a lot of speculation over that, but yeah, what do you guys think about the whole situation?
Well, it just seems like, I always take this stance in it. Do you really, listen to your community, or do you just go for what's best for what you're trying to deliver? I think that's really key, number one. You saw Microsoft do it with the Xbox, and it wasn't something that boded well in terms of what product they were trying to deliver. So I think that's one key thing. But other than that, you've got the whole craziness that sparked from that in terms of Bitcoin Cash, and I think we're going to talk about it today.
Yeah, we are. But just to speak a bit more about SegWit2x, do you guys think it was legitimately just the reasoning for the cancellation was legitimately for not splitting the community, or was there something a bit more sinister behind it, do you think?
Well, yeah, there are talks of it in the community now, due to the 2x fork was planned a while ago. However, there were better choices. So obviously Bitcoin Cash might have been a better choice for them, but they wanted to get more advertising for it. There's talks that due to the Roger Ver, who's the man leading it, tends to be very. He's called the Bitcoin Judas.
Oh yeah, I've heard that.
Yeah. But was this all planned? Who knows? That's for the conspiracy theorists. But what's happening now is definitely what's happening with 2x anyway, and what has gone into Bitcoin Cash is definitely something what's going to be a topic of discussion in the next coming weeks and months. How it pans out, really.
Yeah, I agree. It's had a huge impact on the price at the moment. After, as soon as it was cancelled, Bitcoin shot up, new all-time high again.
Yeah.
And now we've seen a massive drop, and that ties in with what you and Courtney were saying about Bitcoin Cash. So yeah, let's speak more about that. Some people might not know what Bitcoin Cash is, so let's just explain what it is to them.
Yeah, sure. So basically, a few months ago, back in August, there was we actually touched on it slightly on the first Segwit fork. We discussed how Bitcoin and Bitcoin Cash got created. Basically, users who held a bit of Bitcoin say if you held one Bitcoin, you would get one Bitcoin Cash for being on the chain. So it was a free cryptocurrency. Well, basically, Bitcoin Cash had faster transaction times, and just in terms of transaction times and benefits to miners, it was a better coin, and it had better features, and it was newer, and it had the Bitcoin name, so it was called Bitcoin Cash. However, it was sold off by quite a few people in the community because it was seen as just a pretender, not the real Bitcoin. And the main reason why was due to the team leading it and the devs behind it. Bitcoin core development team is a group of people the community hold in very high regard, who work hard. Bitcoin Cash was seen as not that, to term it lightly. However, they've come into they've got a lot of traction lately since Wednesday, since the Segwit 2x cancellation was announced. Basically, the team who were pushing for 2x have decided to use Bitcoin Cash in the future. So they're profiting off the upcoming soft fork Bitcoin Cash is going to go through in the next coming days. I think the 14th, if I remember correctly, but I could be wrong. And then they're going to work on getting 2x onto Bitcoin Cash, meaning it's going to be very profitable for miners to mine, which has caused a lot of miners to move over to from Bitcoin to Bitcoin Cash. Whether it's temporarily or not is remains to be seen.
Yeah, I think there's a strong argument that it will be temporary, mainly because of basic, if you have an understanding of the technology and just basic common sense. Because if people move to the Bitcoin Cash to mine it, that would make Bitcoin Cash mining more difficult, right? So then, and it would make Bitcoin mining more profitable, especially after this. They've got a soft fork coming up, Bitcoin Cash. After that, it makes it even more difficult to mine Bitcoin Cash. So it would make more sense to jump back onto Bitcoin, classic Bitcoin. It would probably be the safer option. So some people are speculating, saying that it's only temporary because right now it's great. It was very profitable to mine Bitcoin Cash, but it's only going to be up until, their soft fork, and also more people join the network and make it more difficult to mine them, less profitable. And then by doing that, it makes Bitcoin more appealing to jump back onto.
Yeah. Hopefully.
Yeah.
So in the community, they're basically calling it the pump and dump.
Yeah.
The terminology.
Yeah. Some people are saying that it could be a pump and dump.
Do you want to explain to people listening who might not know?
Oh
what
yeah.
dump is?
So a pump and dump, you get it in stocks and shares and stuff like that. So a big guy will push up a price of a certain asset by buying it up, and just push up the price by buying it up, attracting so many people to it, saying, yeah, this is a good investment. And when they jump in, they sell all of their shares, make a huge profit, and all the little guys lose all their money because the price crashes down. And yeah,
they're left holding the bag.
Yeah,
bag holder.
Yeah, basically. And the big guys, they're out there counting their money, and the little guys just sat in the corner thinking, what the hell am I going to do now? So yeah, that's basically essentially what pump and dump is, and people are saying that could be what Bitcoin Cash is, because right now you're seeing everywhere online in the community, Bitcoin Cash is the new Bitcoin, blah blah blah, and the price is going up. So the little guy's going to be like, I'm going to jump on this, and it could be the case that the big guys are just sitting there rubbing their hands together like some sort of evil masterminds and waiting to dump the price.
The Bitcoin community hasn't been this divided in a while, but yeah, it's there's a lot of people saying that the Bitcoin Cash is a new Bitcoin, and a push towards being the number one currency is going to happen. So there is a lot of emotion in the markets. It shows in the graphs and in the charts. It could possibly, we've said it may be a pump and dump. It could also possibly be an actual movement in a war, which I think it might be closer towards. I really do hope that for the same reasons we discussed the topics last week. Bitcoin Cash is going to be more centralized due to the features the tech offers.
Yeah, the block size. Mainly.
Yeah, exactly. Yeah. It's a lot more. There's a lot more power directed towards the miners. So yeah, and there seems to be a lot of interest from Korea, which again has a lot of money, Chinese money, flooding in, which are obviously being backed by those Chinese miners who actually mine the Bitcoin. So what we're seeing as of late is just increase transaction time as miners move over to Bitcoin Cash. Whether it's temporary, whether it's temporary or not, yeah, it still remains to be seen. I hope it's not.
Yeah.
Yeah.
Well, we'll have to see. But yeah, moving on to something else we spoke about last week. Touched on Electroneum. Someone in the group wanted us to speak about it. We gave our opinion, and we said that it was a great sort of concept, but we weren't happy with the way it was done. They seemed to have just spent a lot on marketing and spent very little in creating an actual good product, a good piece of technology, and we were proved right, because literally they launched for one day and was immediately hacked. And their whole website is down now. They've outsourced from so many different companies trying to get help from them, and it just seems like a mess, like a big old mess. After all the talk they did about being better than Bitcoin, this didn't happen to Bitcoin. So yeah, I don't know, what's your guys' takes on it?
Yeah, it just seems like their focus was a bit off. I think naturally with any new ICO, your focus should be in your code, making sure that's all in line, and security is one big part of that. How can you really invest in an ICO and have full confidence in them if you can get hacked in the first day? So there is a big worry there, I would say, in my opinion, if I had investments in that particular ICO, Electroneum. But that being said, they can still bring it back. They can still figure everything out, and looking at their Twitter feeds, they're all working on it. They're working all weekend to try and sort everything out. And they've outsourced, and they're looking to meet up with them on Monday to try and solve the issues that they're having. And bearing in mind, if they can do that and they totally sort everything out, they can build up their rep again, I hope. What do you think?
Well, I think it's a big thing for something based on the blockchain to be hacked and basically been made like it's basically been shut down on the first day. It's a big thing, because one of the main attractions that the blockchain brings is security, and if that's your biggest fault, you haven't actually put the work into implementing one of the most beneficial parts of the blockchain into your ICO, which is what it's supposed to be all about. So there's that. But I think, I think with the marketing they've done, they're very good at marketing. I think they could bounce back, but I think they've lost a lot of trust. But we'll have to see. Especially, and I think as time goes on, the longer they're basically shut down for, the worse it will get for them, really.
Yeah, I agree with both of you, really. Particularly about what you said about trust, Jeffrey. I think they lost a lot of trust with their investors. Again, I don't really like saying "I told you so" in terms of ICOs and just investments, because I could easily be proven wrong. And in a way, I hope they do, because I feel at this point I feel really bad for the investors.
Yeah, I think so, and I think it makes the whole crypto market look bad when things like this happen.
Yeah,
so
100%.
It's not really a good thing. We're not taking any pleasure in sitting here saying, "Oh yeah, basically, blah blah, we told you," sort of thing. But what I think we're trying to say is that you should always take your time to do your research with these things. You should always look into it. We did a video we posted on our YouTube, what to look for when investing in a cryptocurrency, and went through all the things you need to look into. If you took those steps, you might have seen that what we saw with Electroneum,
A lot of red flags.
a lot of red flags, and maybe if you're an investor, you'd have thought twice before investing, or maybe you would have invested still because you believed in it, but maybe not as much as you did. So it's just those things you got to take into account.
Yeah, I definitely second that. I think even looking at the last video, I came in with some facts about Electroneum, and I was really positive. But then when you countered it, Jeff, and you kind of just said, look, but there's this and there's that and there's this, and then I kind of started thinking, oh crap, imagine if I went in and dived into Electroneum. Yeah, again, it's like your I told you so thing. You can never really say that you can totally forward think and see everything that's about to happen.
It's not fair.
It's just how it goes sometimes. But that's Electroneum, really, isn't it, guys?
Yeah.
So that's basically a recap on the things we spoke about last week, and they happen to have come into play the following week. But this week we've got a few things to talk about. We're going to be talking about IOTA.
Yep.
We're going to be talking about human psychology when it comes to money and cryptocurrencies.
Yep.
And what else are we going to be talking about, guys?
I guess we've already talked about Bitcoin Cash.
I suppose we have. And
Bitcoin Cash,
I guess we can go further into that if we need to.
Yeah.
I guess it's all about how much time we have left. But I'll start with the market psychology.
Yeah, go ahead.
Well, we thought that we would talk about this as a good topic in terms to take into account your emotions and just thought process for people starting out. Usually, a lot of people coming into the space or in any market, it's good to it's just good to take into account how much the ICO or let's say stock is worth, the value of it. So basically, within money and psychology, like I'm sure you I know you guys play Warframe, and like they have in-game currency called platinum.
Yep.
Other people who might play League of Legends, there's riot points, or like even Call of Duty, there's credit you can buy. You spend real money to get credit in game and spend it. The reason the psychology behind it, the marketing behind it is you spend that money. So you better spend so many for some FIFA coins to buy a card.
Yeah.
It might be 200,000 FIFA coins. However, in terms of value, that might be worth £50 or £100. If you were to spend £100 like that, would you? Is the question you should be asking yourself. So you should always be tracking how much let's say Satoshis in this case is in your currency of choice or what you get paid in. So in our situation, it's pounds. So this is top of my head, but I think it's about 10 million Satoshis is about £5.
Yeah.
Give or take. So that's you can base it on that. So like 100,000 is about 5p.
Yeah.
But yeah, like just doing quick looks like that is a good way to just make yourself realize that this isn't fake money. This isn't monopoly money.
So what you're saying is like basically one of the biggest barriers for cryptocurrency moving on to like bigger wider adoption is the fact that people have to see cryptocurrency in the same way they see real money.
Exactly.
And not just spend it willy-nilly. It's like, and it's the same sort of reasoning, I think, when we spoke about this before, the same reasoning behind when you go to Disneyland, they take away your real money. Well, they don't take it away, but you can trade your real money for Disney dollars. And the reason they give you Disney dollars is because Disney dollars, you wouldn't see it as real money. You think of it as like monopoly money. So you're more willing to just spend it willy-nilly. And the same thing you were saying with like online games and stuff, like they have their own currencies because you're more likely to just see it as part of the game. And for that reason, like if you bought a cryptocurrency and you just had a cryptocurrency because you can't hold it in your hand, and because it's just in a different format, you might just spend it willy-nilly. Won't really respect it in the same way.
It deserves a lot of respect.
I
just came to me now, but the most prime example for this kind of like thought process in humans is casinos. Just casinos straight up. You have to change in for chips.
Yeah, that's true. Yeah,
so
that's a good point.
Yeah, it just goes to show, really.
Yeah, I guess you could easily, put in all your chips, with a blink of an eye and not really think about it.
Exactly.
Rather than actually putting in, 500 grand or something like that into the middle of the table. That would most likely hurt you way more.
Exactly. Yeah.
Tears dropping on your face.
Yeah, imagine the guy you just lost on the roulettes or something, and then he just claws away your 100 grand. Like, it'd be a lot more painful if you literally saw the paper money being taken away from you than these plastic chips which you've owned for about 2 seconds.
Maybe like a deed of the house or something.
Yeah,
something more like physical.
Solid.
Because people have done that.
Yeah.
People have just gambled it away.
Their homes, and stuff
and
like that.
Again, it's a good thing we do talk about this because that is what people are doing on these very high volatility markets.
Yeah, that's true.
So yeah, it's something to always be aware of and to understand. Don't chase that few extra thousand to satoshis. Maybe just wait. Which brings me onto my next point, which is to if you miss your moment or your window to close, to sell, to buy a position, and you see it either going up or down the way you don't want it to go, just maybe waiting it out and reassessing where a better entry point, because usually if you miss your position, you wanna leave, it can cause you might emotionally just sell it a bit too low.
Yeah.
Or you might buy it a bit too high.
Yeah.
It's just something to step back and just take time, be patient, because usually with these markets, they especially these Bitcoin markets, they're very volatile, and they do tend to go up and down. Obviously that comes into take that with a pinch of salt, because it really depends on the market you're in, and say something very drastic could have happened, or some news could have dropped.
Yeah.
But when it comes a time where you want to close, like you've done your TA and you've bought very low and you're looking to sell it high, and you missed it on a very like a high bit the point you wanted to hit. But if all of TA looks good, and it could try to push that high you were trying to get.
Just to for the people that don't know what TA is, it's technical analysis. So it's when you look at the charts and you basically analyze them and determine where to buy and sell, essentially.
But this is one thing I've got a question for you guys, and potentially our listeners have the same kind of question. But you're doing a technical analysis, you're looking at the graphs, but then there's also that aspect of looking at what the ICO is doing at the time, and understanding what the ICO is doing. And I think one problem with people that get into this for the first time is that they don't really get into it because of the ICO. It's more about the coin, and they can look at maybe a graph and say, oh, the coin's doing good here. Bitcoin's going up this whole time. Maybe just buy some Bitcoin and definitely do well. What would be your advice, obviously, be in terms of, kind of balancing the two in terms of...
Well, this is like when Forex trading, for example, you have to, like, I'm a very technical analysis. My analysis is very technical analysis, but like heavily technical analysis. But you still have to have, even in the back of your mind, the fundamental analysis, which is basically the news, the sentiment of the market, the economics. Most of the time, that's just reflected on the chart anyway. But especially with cryptocurrencies, you need to know the technology. You need to know what's going on. You need to know what a hard fork is, when they're coming. For example, in the US markets, forex markets with the US dollar, you need to know when NFP is coming, which is non-farm payrolls, which is basically employment data coming out for that given month or the past month. And you need to know that simply because of volatility. That's going to make the markets really volatile when that figure comes out. So you need to protect yourself. And it's the same thing in the cryptos, but I think a bit more because these are brand new assets. This is a brand new asset class.
Yeah.
People are just learning about them, and they're gaining popularity very quickly, and the volatility is crazy. So any little thing in the market can just whip like up and down in literally a second. So you need to be very aware for just that reason alone. And also, I think it depends what type of investor you are. And that links back to what Andy was saying in terms of like psychology. You need to look at yourself as a person.
Yeah.
And that will tell you what type of investor you are. So if you're someone who isn't very patient, you can't just put something away and forget about it, then maybe being a long-term investor isn't for you. And if you're a long-term investor, you don't really need to look in, well, you always have to look into the technology, but you have to look into it as much as a long-term investor, because a long-term investor needs to know that this technology has a future, and this technology can be applied and is future-proof, essentially, for maybe the next 5 years, 10 years or something. Short-term investor, say you're a day trader or something like that, you do need to look at the charts and maybe less at the tech, because like I said, you don't need to know what like this tech's going to do in the next 5 years. You just need to know what the market thinks about it right now. Yeah. So that's my take on it anyway. What do you think, Andy?
Yeah, I think what you said is very good so far. Like, as Jeffrey said, what kind of investor you are. So, are you thinking short term, or like I kind of split my portfolio personally into my long term holds. So these are the ICOs which I really believe in. I enjoy their tech. They have a good dev team. Read their white paper. I reckon in a year, 2 years, they're gonna go do very well. They're the type of ICO that, say, if there was a dip in the markets everywhere, and it was like I've done TA on them, that's sort of technical analysis on them, and I know where their supports and resistance are. So supports being where there's a lot of buy orders for, and resistance being where there's a lot of sell orders for. Say if it's hit its support, I'm probably one of the people willing to buy, so I've bought the dip. So that's your kind of like long term, like kind of investor kind of side of aspect of things, and you can do both. That's the thing. You don't need to just go all in a short term or all into invest a long term trades. Like you can do, you should do both. In my opinion, I think you should do both. And then obviously you have your short term trades or short to mid term, which you're kind of like swinging, and you know that you've strategized it, and you know that there's some good dev notes coming out for a particular coin. Then you may want to invest in it.
Another thing is like that people might want to pay attention to is FUD and FOMO as well.
Whoa. What is FUD and FOMO?
So basically FUD is basically, well, FOMO, let's just start with, is fear of missing out, which is something that expands into all parts of human psychology and plays a big role when it comes to investing, before you're investing or even whilst you're in a position. So for example, if you see an ICO, and what really gives the ICO market a lot of its strength and where it's getting a lot of its profit from is FOMO, like people thinking, oh no, I need to jump on this ICO, oh look, they're having an early coin offering, I need to get in on this before it blows and becomes the next Bitcoin. That's why they're all quoting, oh, we're better than Bitcoin, we're the next Bitcoin, because Bitcoin has made so much growth, and there's so many people thinking, oh damn, I wish I had Bitcoin before it blew up, I'd be a millionaire, a billionaire by now. And now that reinforces and makes the fear of missing out worse. And it happens in all sorts of, you get it from childhood. Like if you're a little kid and you see another little kid playing with another toy, you want to play with that toy now because you think, oh, there's something better over there. You know, you always think the grass is greener on the other side, and it's not necessarily the case. You always have to try and exclude that that feeling of that FOMO feeling when it comes to investments. And FUD is basically about
fear, unease, and I think it's distrust.
Yeah, distrust. Yeah. So basically, it's a lot of these coins. You got to think about it. A lot of these companies, the investors, big investors that hold these coins, they are in competition with each other. And just like any other business, just like any other competition, they will always try and make their competition look worse so they can look better. So you might see a lot of articles or blog posts and stuff telling you how bad a certain coin is, and it may not be true. It's very it's just a way to manipulate the public, and that's why you have to go to as many sources as you can. Like, we're talking to you right now, but don't take our word as like gospel. You need to go out there and get another opinion and another opinion.
Yeah, learn from different sources.
Yeah, learn from different sources and get some sort of balanced view, and so you can form your own opinion. And that's a big role when it comes to the psychology, and the human psychology and cryptocurrencies, and it's another big barrier that people face today. Did you kind of get that, Courtney? I don't know.
No, that makes sense. You know, so basically, in other words, don't just follow and trust everything like sheep, which is, you know, totally fair enough, and kind of just have your full understanding of what's going on for ICO that you want to invest in.
Yeah. Again, like both of these things are based. Both of these things, FOMO and FUD, they thrive from emotional people and the human emotion. So missing out and fear is basically the two at play. So they tend to come out when you're either like the person investing, so you at home maybe over invested in an ICO, or they may be over invested because they have a lot on the line. Like they've got like 50% of their worth on this coin.
Yeah.
Like, so the best, or maybe they've just seen the charts and they've seen that the ones they're in aren't doing well, but I don't know, let's say for example Bitcoin Cash right now, that's doing amazing. Let me buy that at 0.2 BTC a pop, and that's classic FOMO, really. So it's definitely something to take into account. Usually when these things have risen, they're sometimes priced in, more often than not. And like especially in a market like cryptocurrency, these two FOMO and FUD are at play all the time. It shows in its volatility. To avoid giving into these stuff, like try buying in or selling in daily and weekly, in daily and weekly portions, and not all at once. It basically does average cost. Obviously, it's best to do your technical analysis as well along with that. But that just gives you a kind of a range of where you feel comfortable with. And putting stop losses is very important, because sharp drops, which are very possible within cryptocurrencies, do happen and can happen. So stop loss is sometimes a good way to let yourself sleep at night.
So it's like a safety net there.
Exactly.
Yeah, basically.
Just selling. Sometimes when you've done really well on an ICO, just selling off portions of your profit, portions of your coin or token, just to lock in some profits you've already received. Because you might have got lucky, or you might have done your technical analysis really well, and everything you said was going to become true came true, but you don't know how long this is going to last. Which is a question you should be asking if you're like in these cryptocurrency markets.
Exactly, and even if you're a long-term investor, or even if you're a short-term investor, you need to think about how long it will last. Because if you're a long-term investor, you need to know, will it last a long term? And if you're a short-term investor, you need to know how long will this, like for example, this dip last? Like, is it gonna carry on? Is it a long-term dip, or is it a short-term dip? Can I get in and make some profit here, or am I just gonna get burnt as soon as I jump in? So you do have to take those things into account.
Yeah. Exactly. Like, I know a lot of people don't like the idea of they've hit an all-time high in the ICO they've got, and they want to sell, but they also don't want to sell because they might go higher.
Yeah. So
if you reach that scenario and you have that conflict within yourself, maybe it's better to just sell off maybe 10% now,
exactly.
Or maybe 33% now, or maybe 50% now, and then sell the rest later.
Yeah.
And you can see, obviously, if you sell that, if that's gone down, you've already cashed in profit, a higher profit.
Yeah.
And you made a bit less, but you still made profit. Or if it's went more, you made a bit more profit.
So it's all about risk management and controlling your loss and your profit. It's basically putting yourself in positions of control. If you get into an investment, you have no stop loss, you're just in there. You don't take into account whether it's long term or short term. You just put the money in, hoping that you're gonna make money. You're in no way in control of that. Anything could happen, and you could lose everything. Yeah, you could make a lot of money too at the same time, but it's just about risk reward. If you're listening to this and you're part of like the Forex group, then you've probably heard me say this lots of times. But yeah, it's all about risk reward in my book.
Yeah, because I could only imagine if say I jumped into Bitcoin recently, just leading up to SegWit 2x, and then SegWit 2x not going through. Bitcoin was increasing all the way up until that point, and just after it was still increasing. But then imagine that sharp drop. And I had invested all up until that point, and I started at that point.
Yeah,
I would have lost everything.
Yeah.
So it's a case of managing your loss there. And I like the idea of the stop loss and just kind of controlling that. Controlling what you're doing there.
Yeah, really, like it, a lot of it goes down to again, it is real money we're dealing with, and obviously it's a tool, and we can use money as a tool to get very do different things in life. So there is an emotional aspect of there's always that emotional aspect when it comes to money. However, you can mitigate that by just avoiding going all in sometimes, and just kind of just breaking up how much you can actually risk. Just put yourself at risk less by putting it into portions. You're going.
I was just going to remind the guys that we're not actually financial advisors, so for all you know, we could be chatting crap right now. But so if you actually do want some financial advice, we'd suggest going to a professional financial advisor for all that stuff. But this is just our opinions and how we do things personally.
Yeah, I'd like to see it as imagine you're at a casino and you're gambling. You want that little polite friend on the side going, mate, I don't think that's a great idea. I don't think that's a great idea. Don't put it all in, just be a bit safe.
Exactly. Well, yeah, in the markets anyway, what you can do when, obviously, if say you're a day trader, because that's what they do, they trade, you've done day trading quite a lot, Jeff, and for a fact you can't day trade 24/7 non-stop.
No, I actually prefer swing trading, to be honest, to day trading, because day trading, you can lose a lot of money day trading. Like when I first started trading, full stop, like I was day trading. Like that's just what I first started off doing, and it was okay, but it's not, in the long term, it's not profitable in my opinion. You have to, especially in volatile markets, like it's so crazy. Like the forex market is very volatile, but the cryptocurrency market is crazy.
Even
compared
worse,
to that.
I know.
So Yeah, you've got for me, swing trading is better because it gives you more time to analyze. It gives you more room for that volatility. Um, of course, you can't put in like basically the same amount of portions of investments into a swing trade because it's a longer term trade, and more space for it to move and things like that. So you're at more risk in terms of, like, depending on where you put your stop loss and stuff. But yeah, so as for me, really, it's a thing of basically managing everything, and like I said before, risk reward. Make sure you have your stop loss.
Yep.
Yeah.
Yeah, I was going to say that using, like, with how markets are, it's not always a case where you can see a good trade, or you might find yourself in a position where, oh, I don't know where the market's going to go, and you might be been watching this markets for maybe days, months, weeks. So there are downtimes in markets, and there are times where you need to, like, take a step back and really analyze what's going on. So yeah, you should use downtimes in the markets to research and plan ahead. Doing so will allow you to plan for plan A strategies, and plan for plan B strategies for them, and maybe even plan C.
Yeah.
Just so you know going forward what you're going to do. So you might find a forecast of future dev nodes, or future hard forks, or just future improvements on ICOs which you're interested in, and you know that you're going to go from ICO A, pull it into ICO B, sell, wait. This will give your psyche
more of a chance.
to not be
sorted by the market.
Exactly, sorted by the market and just be defaulted. Going in with a plan will stop you making emotional decisions, and it's the emotional decisions what make you lose money.
It's like going into battle with armor and weaponry. If you go into the market with no strategy, your life is about to get it's going to change, and it will change basically. Let's just put it that way. But yeah, I think we should move on to the coin of the week that we're going to speak about. It's actually my personal favorite coin. Just my personal favorite coin. I like it a lot. It's IOTA, and for you guys who've never heard of IOTA, it's a special coin because it's not actually based on the blockchain. It's got its own technology, which is kind of an upgrade of a blockchain, which I find really fascinating, called the Tangle. And the main distinctions between the Tangle and the blockchain is that there are no miners on the Tangle, and that basically the verification of transactions is done by transactions. So I'll try and keep it simple. It's quite difficult to explain without visual aids, but I'll try my best. So every transaction has to verify 2 previous transactions in order to be placed on the Tangle. So when you place your transaction, your transaction verifies 2 transactions, and then that transaction that you just placed gets verified by another one that is verifying 2 other transactions, so yours and something else, and so it goes on like that. And the reason why this is special is because it makes it very secure. Because, for example, it makes it, I think we've spoken about quantum computers in our group, but aside from that, you can basically brute force, like a brute force attack is basically when a computer is attacked by some sort of virus or several computers and basically overloaded. So like a DDoS attack.
Yeah.
And the reason why, right now on the blockchain that wouldn't be possible, but in the future there will be computers that could do that, but that's something the blockchain will have to deal with in the future. But the Tangle's already built to like defend that against that sort of thing, and actually become stronger when you attack it, because in order for you to attack the Tangle, or to be part of the Tangle, you're basically giving it more power, because every transaction, every input you put into it verifies 2 other inputs, and so therefore makes the whole tangle bigger and stronger, and that to me is like something that is very underrated at the moment. It IOTA seems to have been getting a lot of hate, but I think it's down to a lot of misunderstanding, and there's other factors which will come along, speak about. But another thing that comes out to me about IOTA is that the transaction times are super fast because of the structure of the tangle. Now, Bitcoin I think does how many transactions per second? I think like 7 or something, 3 to 7 or something like that.
Something like that.
Yeah, and then Ethereum, which is faster, does like 15 to 20, and PayPal does like 200, and MasterCard does like 1,200. And already IOTA, without even having that many users, compared to the others, has a transaction time of 1,000 transactions per second.
And you can do it faster.
Yeah,
depending on how many people use
exactly. The more people use it, the faster it becomes, the better it becomes. And another thing, IOTA, the main focus of IOTA is Internet of Everything. So basically, that's like the interconnectivity of machines. So in the future, for example, I think Andy does a lot of work with this, like where you work in terms of like development, like so computers being like basically an automated home. So your home, they'll say you have a fridge, and your fridge can detect when certain amount of foods have run out in your fridge, and then basically sends a message to, I don't know, a shopping company or something, and then that shopping company delivers it to you, and it's all sort of automated, that sort of thing. And that could be run on the Tangle because every transaction will be secure and safe, so no one will be able to hack into your computer, into your network, your home network, and basically know what's going on with your fridge, for example. Not that I don't know why anyone would know that, but yeah, you know what I mean. Like
Internet of Things is it's like we're talking about how like blockchain technology is like the big thing. It's more enterprise and business level. In terms of consumer level, Internet of Things is the thing. It's happened. It's already there. You just need to look at Amazon. Anything like they've got these like little dash things like that you put them on your wall, and when you run out of I don't know, personal washing up tablets, you press it and it orders it to your home. So like it's
and it's like connected. Those things a Hive, I think it's like an app that basically you can change your heating with and stuff like that. You can basically be outside on the tube, not on the tube, you might not have connection, but outside waiting for the bus, and you basically turn on your heating, so by the time you get home it's all warm for you, and you get home, you're all cozy and stuff. So
I think one thing we haven't touched on though is in terms of the finance behind it. If you could imagine that every transaction that happens on a blockchain, as a blockchain gets bigger, it gets more costly, because you've got to obviously get more people to mine it, etc, etc, etc. And before you know it, the cost of mining and everything else in terms of transaction fees will go up. Bitcoin, for example, I believe right now it's averaging around $5, I believe, for a transaction. Don't take my exact word on it, saw it somewhere. But what IOTA is suggesting is that there will be pretty much zero transaction fees, because naturally, you're actually authorizing other transactions to get your transaction through in the first place.
Exactly.
And
sorry to cut you up there, but I just remembered that is basically what you just highlighted there is key, because it's proof of work, but a much more efficient version of proof of work. So instead of having to use up all this electricity, do so much damage to the environment, have this huge powerful computer that's heating up your whole room, your normal computer, normal device can verify these transactions, and that is your proof of work. That's the work you've put in, and you've earned the right to basically have your transaction validated. So yes, it's a lot more economical in that sense, like what you were saying.
And in terms of economy, it's to continue with the eco approach. It's actually self-sustaining. as demand increases, especially with the Internet of Things, you're going to find out there'll be way more devices. I think, again, the projection by 2020 will be about 28 million devices that will run on the Internet of Things. Naturally, that would mean more transactions, etc. But in the way that Tangle works, if it can keep on growing, it will be able to, ensure that it can keep up with the demand, pretty much, which I think is quite interesting. If you think about anything, vending machines, anywhere we're going to go off and we're going to actually maybe use cryptos to actually pay for things, those microtransactions will happen from our devices straight to the other device on the other side. And we would need pretty much no transaction fees. Otherwise, you'll be paying for maybe a chocolate bar at the vending machine quickly with your phone with a transaction, but the transaction fee will be more than the actual...
the actual bar.
That'd be the case if you're buying it with Bitcoin.
Yeah, exactly. If you were trying to buy a Snickers bar with Bitcoin, the transaction fee would be a lot more than the actual Snickers bar.
Especially right now as well.
Yeah, exactly. With exactly the situation it is in with like Bitcoin Cash and everything, but yeah, like IOTA is something special, but it's not all peaches and cream. They do have there's a lot of backlash from the community. Like I said before, it's mainly to do with misunderstanding, but they aren't fully open source. They've hidden certain aspects of their code. Now their argument is that it's because, like, for security reasons, because certain aspects of their code, if certain people knew about it, they'd be able to manipulate or attack the system. And some people are arguing, well, you can attack the system, can't you? Or, that sort of thing. Or it should be completely open source and things like that. So they get a lot of hate. There was an MIT report that came out saying that they could get attacked and stuff, but that was slightly malicious in my opinion, because they couldn't actually be attacked because there's only there's a section of code that needs to be applied to the vulnerability that only they have. So if some attacker was about to use that same vulnerability or was trying to basically take advantage of that vulnerability, it wouldn't work because they don't have a certain code that only IOTA developers have. So yeah, that was that, but that's a complicated situation. I don't think I'll go through the whole thing today, but yeah, IOTA as a whole I think is very special. It's unique. It brings a whole new, fresh look at proof of work, a lot more efficient. I think the real world applications are going to come into effect in the next few years, and we'll see it more and more. I think you can get smart light bulbs. I saw someone online had smart light bulbs.
Flux, I think.
Yeah, and they're basically part of the Internet of Things universe or framework. Those little automated vacuum machines, like they look like disc. They're part of it as well. If your room starts to get a bit dirty or something, and then they start learning, AI ties into it. It's basically the future, and I don't see any way that IOTA is just gonna disappear. Really, the technology is too strong. The developers are very smart, and that's another thing. Though a lot of people don't like the developers because they feel like the developers are kind of up their own bums, but not to be too crude, but yeah, I really think that they are actually geniuses. That's just my opinion. I might be biased at the moment. For me, it's a long-term hold because I don't see the community accepting it properly yet. But one of the barriers it has is that it's only on one exchange at the moment. So maybe when it comes onto more exchanges, the price will go up.
Apparently, there's talks of it being added to Bittrex.
Oh yeah. I heard that, yeah.
I'm definitely gonna buy some. I think if at the right price. But yeah, one of the reasons why they haven't been on a lot of exchanges is because they haven't made many friends. And this is a community where you need to kind of make friends, and collaborations are a good thing. Being open source and collaborating with investors who are also devs or people who believe in your project as well tends to be a good thing. Like you can see, like the whole decentralization is inherently a good thing. Like it does bring up questions of well, we can't see the code, like
Yeah.
it made people start thinking, oh, the people making it are up to something malicious. And I mean, I guess they have a right to feel that way because with ICOs and a lot of them being let's be frank, often scams.
Yeah.
Often just money grabs. You can see why people want to ask questions and want to ask why aren't you showing us what, like, so if the security is at risk, why, like, shouldn't you work on it stronger, like, more, sorry. But I personally, overall, I think IOTA looks amazing.
Same. I can go on about it all day, but unfortunately we don't have that much time. Like, IOTA is something underrated, and you know, for me, from an investor's point of view, I'm kind of happy it's underrated at the moment because I can just get IOTA for cheap. Like, it was like 35p per coin when I got it, and yeah, there's so many there's so many applications it will have in the future. Bosch did a speech lately. They were doing some sort of keynote, and they mentioned IOTA and possibly working with IOTA. So I think people are starting to, Bosch is a big company, a household name. Like, they make your washing machines, cookers, and they're going to be heavily involved in Internet of Things.
Yeah.
And integrating something like IOTA would just bring it into the household, and that is when adoption. There's no other coin that can be put in the household like that.
Exactly.
There's
awesome.
nothing. So that's how you get like adoption in everyday homes. People may have apps connecting their phones to their washing machine, doing their online shopping, all with IOTA, and that is the future that I see. But I might be wrong. Like, this is just my opinion, my personal belief. I'm sure there's still a lot of other good coins out there. I still love Ethereum. I think there's space for a lot of coins, but I think Vitalik Buterin, the creator of Ethereum, came out and said 90% of these coins are just gonna die, and I have to agree with that because there's so many of them. They can't all be the coin that everyone's using. 90% is kind of a generous amount if you think about the amount of coins. There must be thousands of cryptocurrencies out there at the moment. And I mentioned it to someone and they were like, no way, 90%, that's too high. I think that's too low. But you know, you kind of have to take these things with a pinch of salt, I suppose, and you got to look at things in a certain way. So, you know, IOTA for me is the one. Maybe for you something else is. But yeah, like I said, I can talk about IOTA all day. I'm a bit passionate about it, but you know, that's me. And when I'm investing, I have to try and step away from that sort of emotion, kind of what we were talking about. But we are human after all.
Yeah.
But like Michael Jr. in the group always says you got to be like a robot when you're investing. You'll be a machine. Think like a computer. So yeah, I think that's it for IOTA. Do you guys have anything else to say about IOTA?
Well, I think one, we just realised that Jeffrey's actually a blockchain anyway. Yeah, I agree with IOTA. I think that it has the potential to be one of the biggest cryptos really, really soon. I think especially, you know, as the Internet of Things starts to pick up, something that is in its kind of fetus stage. So I think once it's a bit more mainstream and IOTA, you know, profits off of that, I think you'll find that the coin will be much, much more valuable. And it's just waiting. As I said, it's about 28 million devices are said to be in 2020, I believe, taken on this approach of the Internet of Things, and it's going to be everywhere. You know, just as much as we always thought that, you know, you're going to have shop assistants in shops, and now all of a sudden you've got computers replacing them. It's the future. And, you know, they're going to be one of the first adopting this future just as much as Apple with the iPhone. Adopting this future is a key thing to, you know, growth. And yeah, I'm really excited, if I'm honest with you, to see what IOTA is capable of, and if they work with big companies such as Bosch, what comes of it. It's if you're into tech, you should be really excited at this point in time, not just in the coin, but just in terms of tech in itself. Yeah. So it's an exciting time, and yeah, can't wait to see what happens.
For me, in terms of IOTA, it's their technology was what's impressed me the most. Obviously, IOTA aren't in a sense like they are blockchain, but they're not blockchain. Tangle is its own thing.
Yeah.
It has similar properties. It's interesting how that if this like people are saying it's blockchain 2.0. There's talks of that, which I think is interesting. I would like to see more. But I right now I know that it's still pretty much in its infancy. It's definitely an ICO which I'm going to continue watching very closely until I can actually buy some, and then I think it's going to be a long-term hold for me. But yeah, like again, we've said this before. There are coins who have come before, who may have done it better or worse, and there may be coins who come after and do it better or worse. It will be interesting to see how well IOTA does in this market. I hope that they make more friends, and I hope they make more collabs, like you said with Bosch, which I think is incredible. And again, they finally might be on Bittrex now, which is incredible.
Yeah.
These are steps which need to be taken. I mean, $1 might be in sight.
Yeah, could be. Yeah, it's been rising over the past few days.
Yeah, it has.
And you know what I just realised? IOTA is basically like the Hulk. The more you attack it, the stronger it gets. That blows my mind. Wow. That's something to think about, guys. I'm joking. No, but yeah, I think that's it from us today. So yeah, overall we spoke about SegWit and the effects that had and what's going on with Bitcoin Cash and Bitcoin at the moment. We'll have to see what happens. We'll probably end up speaking about that next week, depending on what happens over this week. Electroneum, hopefully they can sort things out with coming up and like getting running and sort out all the bugs they have. The worst thing for them would be to just start up again and get hacked again. I think that would just be the worst thing. Let's hope that doesn't happen. We spoke about one of the barriers for cryptocurrencies and the barriers for adoption is human psychology, which is a big one, probably its biggest one. And it's human psychology for you as an investor. And then finally IOTA. So yeah, I hope we helped you guys. Hope you guys enjoyed this. We'll be back next week. If you want to support us, give this a listen on SoundCloud or YouTube, upvote it on Steam, like and subscribe to our YouTube channel, sign up to one of the exchanges in the description, or you can secure your cryptocurrency with a hardware wallet by using our referral code in the description. But yeah, thanks for listening, guys. Yeah, see ya.
Have a good week.
Take care, guys.